Elia Limited is a manufacturing company which deals in manufacturing of cold drinks and beverages. It is having various plants across India. Most probably they'll give all those again. Registered address, GST address, PIN code, everything, phone number. There is a machinery A in Baroda plant. See, I told you, they're telling, which is used for the purpose of bottling. Of course, if it is beverage cold drinks, you need bottles. You can't just sell them directly. It's not Tirtha, no? Otherwise, you could have sold directly. There is one more machinery, which is machinery B, clubbed with machinery A. Machinery A can individually have an output and also sold independently in the open market. Machinery B cannot be sold in isolation, and without clubbing with machine A, it cannot produce output as well. So at this point of time, you should understand A can be tested for impairment individually, but for B, you need to apply CGU. A and B are together. The company consists of group of assets as cash generating units and an inventory amounting to 2 lakh and goodwill amounting to 1.5 lakhs is included in such a CGU. Inventory is also coming, goodwill is also coming. Machinery A was purchased on 1st April 2013 for 10 lakhs and residual value of 50,000. See again, so inconsistency. Rupees 10 lakhs, okay, rupees 50,000. They could have kept at least consistency there. Machinery B was purchased on 1st April 2015 for 5 lakhs with no residual value. Useful life of both machine A and B is 10 years. Okay, one is purchased in April 13, other is purchased in April 2015. So, but when are we doing impairment calculation, if any? I think as of now, no information. Okay, fine. The company expects the following cash flows in the next 5 years pertaining to machinery A. The incremental borrowing rate of the company is 10%. Cash flow from A, 1 lakh 50, 1 lakh, 1 lakh 50, 1 lakh, 6 lakh total. 1 lakh is excluding residual value, which means this residual value of 50,000 should be added while calculating 5th year cash flow. On 31st of March 2018, professional valuers have estimated the current value of machinery A is 7 lakh. Okay, so they are calculating or computing impairment on March 2018. So for both machinery A and B, it was purchased long time back, but you are valuing on 31st March 2018. Therefore, first step would be to calculate the existing amount, carrying amount after providing depreciation. But here one small trick is there. It's a very silly thing, but people do fall for it. That is, how many years depreciation are you going to provide? You are calculating on 31st March 2018 and you purchased on 1st April 2013. So you are going to provide depreciation for 5 years, 2013 to 2018. Simple number only. Don't get confused here. I'll tell you where to get confused. 2013 to 2018 you provide for 5 years. Then it comes to machinery B, but there what happened is it's purchased on 1st April 2015, 2 years later. So your depreciation should only be for 3 years. But people miss out on that. The reason is they said useful life of both machine is 10 years. The word both would have been injected into your brain. That's what you remember. Both 5 year depreciation you provide. Because the date of purchase you don't differentiate that they are different. The both is applicable only for their useful life, remaining useful life. So if when you are calculating subsequent year depreciation and all, this is going to have an effect. Machine A's remaining useful life is 5 years. Machine B remaining useful life is 7 years. So though the word used both, the calculations are not both. It will change. But people do mistake on this. Okay. Professional valuers have estimated that the current market value of machinery A is 7 lakhs. So 7 lakh is market value, the fair value less cost to sell, that fair value is 7 lakh. Value in use we have to calculate, they have given the cash flows. The valuation fee was 1 lakh. Valuation fee 1 lakh means should not be considered anywhere. This is not selling expenses. Valuator fee is not selling expenses. There is a need to dismantle the machinery before delivering it to buyer. Dismantling cost is 1.5 lakhs. Where you are going to consider this 1.5 lakhs? Dismantling costs. Will it be capitalized at the beginning as per Indus 16 PPE? Present value of dismantling costs? That is not this dismantling cost. Just because the word dismantling is there, don't think the same. That is where the holder of the asset has an obligation to give the existing property on its original condition. So cost of construction and cost of destruction would have been considered. This dismantling cost is removal cost. Whenever you have to sell something, you have to ask the laborers, pack it and go and sell in the market. Those transaction charges are there. They are called as dismantling cost. This dismantling cost is not same as that dismantling cost. That dismantling cost is when the holder has an obligation to spend money to keep the asset in the original condition, where we capitalize. Here that is not there. So this dismantling cost is simple terms selling expenses. So when you calculate 7 lakh, you have to subtract 1.5. And by adding the word dismantling, they dismantled your understanding. Specialized packaging cost would be 25,000. Here also inconsistency, consistently inconsistent. 1.5 lakhs, 25,000 units. They play with your feelings there. So this also selling expenses. Legal fees would be 75,000. Again, legal fees associated with selling, I believe. So you can subtract. Inventory has been valued in accordance with Ind AS 2. Recoverable amount of CGU is 10 lakh on 31st March 18. In the next year, the company has done the assessment of recoverability of CGU and found that the value of such CGU 11 lakh on March 2019. 2018 also giving, 2019 also giving. 2018 there is an impairment. 2019 also they are giving means it seems there is a reversal. That's what they are giving in the same problem. The recoverable value of machine A is 4,50,000 and combined machine A and B 7,60,000 on 31st March 19 required. Compute the impairment loss on CGU, carrying value of an asset after charging impairment loss for the year ending March 18 by providing all relevant working notes to arrive at such calculation. Compute prospective depreciation for the year 18-19 on the above assets. Compute the carrying value of CGU on 31st March 2019. So beginning to end. 2018, you provide impairment. 18 to 19, you provide depreciation. And on 19, you compute again impairment, basically reversal of impairment. Then after reversal, how much would be your carrying amount? So full-fledged question. Maybe for 10 mark, 12 mark, 16 marker if it comes in exam. Okay, so for computation of impairment from machinery A, carrying amount 10 lakh minus depreciation for a period of 5 years from 2013 till 2018 divided by 10, 5 year is over, and cost of the asset is 10 lakh. Scrap value, residual value 50,000, so 0.5 divided by 10 useful life multiplied by number of years completed, that is 4,75,000. Remaining amount is 5,25,000. Recoverable amount, value in use, 5 years, cash flows they have given. And last year, in the problem they said 1 lakh, but I have included 50,000 residual value. After scrap value, after useful life, that number also will be there. Discounting factor 10%, multiply, you get the present value. That present value is value in use. Fair value less cost to sell. 7 lakh is the fair value. Dismantling cost, packaging cost, legal fees subtracted. Valuator fees is not subtracted. That is not selling expense. Whichever is higher, 4,89,650. Therefore, 5,25,000 minus 4,89,650, impairment loss 35,310. See any doubts still there? Impairment 35,310. Again, if at all it comes in exam, this kind of question comes as it is without any changes. Usually those difficult questions are taken from RTP, MTP somewhere and cast as it is in the examination. So if you solve these questions, should give you confidence in exam. So at least after attending this class, you should be able to make a better decision that either you know this problem or you don't know this problem. So both ways attending the class helps. Sometimes you understand. Sometimes you understand, you cannot understand. Both ways it's fine. Hope you understood what I'm trying to say. If not, don't worry, you'll realize in exam. Yes, please. Correct, but as on date, remaining is 5 years. 5 years is over. 10 years from the date of purchase. But as on calculation date, remaining is 5 years. That's why. Okay, fine. Hope you got till there. Then, machine B. Machine B, you cannot do it separately, but you definitely need carrying amount at least for you to do impairment. Therefore, cost of this at 5 lakh, and how many years you are going to provide depreciation? Only for 3 years, purchased on a different date. Therefore, carrying amount 3,50,000, I cannot compute impairment. It is not capable of generating independent cash flow. So I made it on columnar basis. Machine A, machine B, inventory, goodwill, total. Carrying amounts of machine A after impairment 4,89,650, 3,50,000 for machinery B, inventory given 2 lakh, goodwill given 1,50,000 and total 11,89,000. And recoverable amount, see in the problem, what is recoverable amount of this CGU as on 31st March 18? 10 lakh. Therefore, impairment loss becomes 1,89,650. 1,89,650, that is there, balancing. Now, how do you allocate that 1,89,650 is an interesting portion. First thing you adjust against goodwill. That number is not there in the material, that you have to write it down. Everything cannot be printed. So somewhere you have to fill the missing gap. So 1,50,000 you write it as goodwill. Inventory, how much you take? No allocation of impairment, because this standard don't apply for inventory, so impairment of inventory cannot be taken here. By the time it comes here, it would have been already impaired, if any, because AS2 only would have taken it. Cost or NRV, whichever is less. How much you give it for A, machine A? 0, because that is also already impaired. You cannot further impair it. So only thing balancing figure pending is related to machinery B. If one was machinery was there, machinery B, machinery C, then you would have divided on proportionate basis on their carrying amounts. So that's the amount you get. Nothing for A, nothing for inventory, goodwill, entire 1,50,000, balancing figure goes to machinery B. Those amounts are not there, fill it up. Next, you get depreciation for next year that I have given. Revised carrying amount minus scrap value 50,000 divided by remaining useful life. 3,10,350 revised carrying amount minus no scrap value divided by remaining useful life. That will give you the depreciation and carrying amount. After that, they have given the recoverable amount in the problem. For machinery A, 4,50,000. For machinery B, it is 3,10,000, 11 lakh. I think I have given solution only till that point. Yeah, after that, you have to write down. This is until, this is first part of the problem, revised carrying amount, the impairment loss, and depreciation, second part. Third part you have to solve. Now, recoverable amount 4,50,000. So, can I reverse differential amounts from carrying amount to recoverable amounts? You can reverse, but make sure that it is not crossing the carrying amount if there was no impairment. That column 2 things we had prepared. So, recalculate that amount, see if that amount is crossing. As of now, you can write reversal of impairment, find out difference, but entire amount may not be allowed. That we need to calculate. So, what we require is we need to calculate how much reversal of impairment allowed. What would be the carrying amount if no impairment? If no impairment means what would be the otherwise carrying amount before doing all these circles? For machinery A, we had amount of 5,25,000 without impairment, and you would have provided depreciation of same number. How much? This 10 lakh minus 0.5 divided by 10. That would be 95,000. And for machinery B, it would be 3,50,000 minus 50,000. This 50,000 is this 5 lakh by 10. Inventory, that would not have changed. Goodwill reversal not allowed. So, no question of reversal for goodwill. So, carrying amount without impairment would be 4,30,000, 3 lakh, 2 lakh. Therefore, you see that recoverable amount is 4,50,000, but this amount is 4,30,000, which is a lower number. This also 3,10,000, this also 3 lakh, lower number. So, how much reversal of impairment allowed? From 4,01,722, 4,30,000, 2,66,14 to 3 lakh. Only so much reversal of impairment is actually allowed. Reversal allowed. Just calculate these two numbers, especially forget about the other columns. These two first two columns, write carefully. So reversal allowed only up to the carrying amount without impairment. So 28,280 in first case and 33,986 in the second case. And after reversal means you add to the carrying amount, you get the remaining amount. Therefore, carrying amounts 4,30,000, which is nothing but the amount if there was no impairment, 3 lakh, 2 lakh, final 9,30,000. So actually if you compare this number, if you want to get this number directly, I'll give you in a very simple manner. Okay. So what was the amount of thing you purchased for machinery A? What was the cost of the asset for machinery A? How much you paid for? 10 lakhs. Minus depreciation if I have to do. 10 lakh minus scrap value 0.5 divided by useful life of 10 years. And how many years is over? Totally 6 years. So simplify, see how much you get. 10 lakh minus, this is how much? 10.5, 10 minus 0.5 by 10 into 6. 4 lakh. I mean, depreciation is 5.7, I think. After subtracting, you get 4.3, and that's what you got here ultimately. After all the circus of provision of impairment, reversal of impairment, your value remains same as before without any impairment. Same thing for machine B also. Inventory, and the only thing is goodwill, whatever is impaired, cannot be taken back. For old syllabus answer, this 1 lakh also you can write as 1,50,000. Because reversal of impairment is allowed in AS 28, not allowed in Ind AS. Completely crossed, correct. Complete reversal happening. Inventory, the stock. And when you say group, group will have machinery also, group will have inventory also. AS2 value only. Value amount of inventory after valuing AS2, after applying that. No, not in machinery A and B. It's an independent inventory, like just like a stock. That was required because the amount of recoverable amount was not given individually. We had total, and the total recoverable amount includes inventory portions. For that only, you have to bring in inventory also. If the amount on A and B was available, we could have done directly. That's what we had done actually. Indirectly, that's what we had done. 10 lakh we are taking, 2 lakh we attributed, remaining portion only we are allocating here. So it is indirectly that. If there was revaluation reserve existing, yes. This impairment loss, 39,650, 1,50,000 will go to revaluation reserve. In that case, when you reverse impairment also will not go to P&L account. That will again go to revaluation reserve only. So go to the full problem, see if you have any doubt. So after all this calculation, what is important is you should be comfortable with the format on the steps. So first step, usually we always allocate, then we compare. Second step is we take one more asset or few more assets where you cannot allocate specifically. So first step is to allocate of impairment of individual assets, then the impairment of CGU, then higher CGU, and then higher CGU. You keep on going up the higher hierarchical level. Okay, so that is Ind AS 36 impairments.